Hello everyone, and welcome to our new webinar. It's October 14th, so it's start of a new trading week. We have holidays in US and Canada, but stock market is not closed. Some institutions are closed. Bond market is closed, but still can be okay. So I'm just checking something if everything works fine. Okay, just a second. Okay, sound works perfect. So I just been notified by a team member that everything works fine. Okay, so by the way, if you're a first-time visitor, please make sure to subscribe to our channel, press a like, leave us a comment if you watch this recording later. By the way, for new members, we still have this special offer going on. Get the 2 months for the price to check this out. Now, as you know, last week we got inflation data from the US. The expectations were 2.3%, down from 2.5. We came down to 2.4, so it's a bit sticky. It's a bit sticky. Inflation could be here around current levels. More importantly, we are still seeing US yields moving to the upside. Here we have 2-year, 30-year, 5-year, 10-year, and everything still looks like we found some very strong support, and we could either stay sideways or possibly even higher. So if inflation would really be a bit more sticky, energy prices will continue to rise, then we can expect the dollar will actually be moving even higher. But it's not only the US CPI, of course. When we are looking at potential easing, it's also important to keep an eye on global CPI figures. And this week we will get data out of UK, Canada, Japan, and New Zealand as well. However, for dollar this week, especially if you're looking at dollar index, keep in mind that this one will be mostly be driven and impacted by the ECB. So it's not only about the dollar. You have to really look what the euro dollar will do to make to maybe get a better observation of what dollar index may do next. Okay, so when looking, before we go to euro dollar and dollar index charts, I also want to look at the TLT. Now TLT has seen a pretty strong and aggressive move to the downside. Okay, and if we start breaking this lower trend line support here, then I'm afraid that the US yields will see much more upside, and this technical picture would definitely then be looking very bearish for bonds. So at the moment, what is going on for the last 2 weeks, and I doubt that that situation will change dramatically till inflation, till elections later this month. Then in November, then of course I still think the dollar could actually hold a bit here. And before we go to dollar index, I want to look, as I said, and want to discuss about the euro dollar, because the ECB is expected again to cut rates. Germany and economy in Germany is not doing well. So of course they are looking to support their economy, and obviously inflation, latest one, Eurozone came out around 1.8 as expected, down from 2.2%. So definitely they are looking to cut rates to continue with this easing cycle, and of course that's one of the reasons why euro dollar is coming to the downside. And on the other hand, if you have maybe more sticky inflation in the US, then of course this can keep euro dollar in downtrend. Now from an Elliott wave perspective, we have a very clear 5-wave drop here for wave A from that highs. So after a rally, we can expect more weakness. Now shorting euro dollar here ahead of Thursday event, ECB rate decision, of course, may not be the best approach. Even if they would cut as expected, it doesn't mean that euro dollar will fall straight through the supports. It can be buy the rumor, sell the news impact, and even if once they decided to cut rates, you can see some rebound. So I still suggest that you wait on a bounce first. If this will occur from current levels, fine. If this will occur from even lower levels, in either case, you have to be patient and wait on a retracement. Now, normally when I'm tracking and observing corrective rise, I want to see a retracement for the 38.2%, okay, of wave A. So in our case, this first resistance zone, if we speculate that we will bottom very soon here around 109, then 1.10, 1.1040 is even better potential resistance area for this wave B rise. So after potential pullback, if we get one, I think that more weakness could be seen. Also, that's very nice resistance here at the previous swing low as well. So this one was broken quite sharply, so that's why I'm thinking about more weakness after the bounce. Also, what's important for the euro dollar is definitely the rate differential, right? And in the US, you can see that since euro dollar here started falling quite aggressively at the start of this month, you can see that here yields in Germany were falling much sharper compared to one in the US, and you can see that now the US are falling rising much more aggressively than one in Germany, and this means that obviously US dollar is much more attractive. So this rate differential is definitely very important for euro dollar direction. Now, as I said, so the ECB will be very important for the euro dollar, and because dollar index obviously a lot depend on the euro dollar based on calculations, then of course dollar index could be impacted as well. But from an Elliott wave perspective, still we are seeing this recovery that is unfinished. We firstly thought that maybe a 3-wave rise will finish around 102, but since this is a very strong and sharp rise out of an ending diagonal, we definitely have to respect what the market is doing right now, and currently is on the rise. So we should be aware of even more upside after a pullback. I will not say that this is a completed correction if we have just only one leg to the upside. Even if my higher degree time frame charts still suggest that at some point the dollar will continue lower, yes, maybe that will be the case, but firstly I need to see 3-wave rise from the lows to make sure that this is a correction, that we are coming into some resistance. So I still think that there is even room for 104 if not higher, but as I said, again, if we get a dip here, if we get some bounce on the euro dollar, then of course this would make sense to look even for some potential dollar long opportunities on different charts. But there are plenty of other pairs that are showing still extended first legs, meaning that we could see some retracement. Now here we have also cable, very nice, very strong drop out of this wedge pattern. We are coming now into some support here around 1.3. It's not only swing support, it's also psychological support as well. So you definitely want to see some bounce. Now the latest as you know, the latest speculation suggests that Bank of England is looking to cut rates. So this week, UK CPI data is expected to come down to 1.9 from 2.2%. So, of course, if they will meet expectations or maybe even beat them, then of course, cable should continue even lower. But I certainly think that it's still very risky to look for potential any kind of trades in this area. I just prefer to wait on a bounce whenever this one occurs. Okay, maybe if we speculate and if we see some bounce in the very near term, then who knows, maybe even some head and shoulders stop formation could be playing out here as well, and you know where the resistances could be met. And as I said, the 38.2% is normally my minimum objective whenever I want to define the first resistance of this wave B rally. So clearly we have plenty of time before this one can show up. You really have to be patient here. Now, last week, what was very important is that China has slowed down a bit. We were seeing quite nice pullback on Hang Seng Index and China 50 as well. And if you look closely, there is a very nice correlation with Aussie. And what is very important is that if we see some more weakness on Chinese markets, then it means that Aussie could also come down a bit. Even copper has found some resistance. So if you look here, and what I think is important, if you look here at this intraday wave structure, okay, you can basically see that we have ongoing bearish impulse on Aussie. And we've been looking for this resistance with members, where we also share obviously some of the intraday analysis as well. And we noted that most likely we are here in a wave 4 and looking for more weakness into wave 5. And the reason is because even if this Hang Seng Index is just in a temporary retracement here, just some kind of a pause before we see another push to the upside, it's still in complete decline, right? So we are missing this third leg here, and until this wave C unfolds, I think that that's how long Aussie can stay under pressure. Okay, so be aware of more weakness on Aussie. Also, now it's Monday. We have some Monday flows. You know how I look at them. If I see very sharp moves on Mondays and some key levels are broken, then usually these moves can be completely erased or reversed in Tuesday or Wednesday. Okay, so this makes sense also when looking at this wave count, because we could be here moving into this wave 5. So at some point I still think that we will retrace back to this wave 4 resistance, and even if there is not some error with quotes here, we even have some gap here from Sunday, which normally should be filled. So definitely if we see some kind of a rally, I think that Aussie could still be a very interesting one on the short side. Now, recently someone asked for Hang Seng Index higher time frame charts, and basically what we are looking at, okay, is some very big triangle. So despite a lot of hype that we have seen over the last few weeks, I still think that the very big range is here, and that we will not see break out of this range anytime soon. Okay, of course we could see more upside in the next few weeks, but I really doubt that we will continue straight to some new bullish phase here. Now, if we also take a look on on the dollar yen, so as I said, we have also inflation report this week from Japan. This one should be very interesting because, as you know, they slow down the hiking phase. And if the inflation would obviously come out strong, then who knows, maybe they will change the rhetoric. And from an Elliott wave perspective, I still see this very nice rise away from that September lows. We could be moving into this resistance, but the problem with dollar yen right now is that we have US yields that are also trading to the upside. So as long as US yields are trading to the upside, dollar yen could either be sideways or maybe even test higher prices. But if there will be some very big numbers or misses with inflation, then of course this can trigger a reversals on dollar yen pairs without a need of US yields coming to the downside. Okay, but technically we are definitely approaching some very nice resistance around 150, 152. And also, whenever Japanese yen is going to be strong, that's when we should be looking at yen, at other yen pairs as well. Actually, I really like Aussie yen because of the reasons that I described earlier. I see Aussie dollar moving even lower. I see dollar yen moving into this potential technical resistance here around 150, and if we see some sell-off, I just think that ASEAN could be could be very, very attractive. Actually, I have some very small shorts on ASEAN and could be could be looking for more weakness. If I just try to open the charts here of ASEAN to show what I'm looking at. Okay, so that's ASEAN. You can see that we had some very nice and strong sharp drop, and now a free wave rally back into this resistance area. So I think that there is actually a chance that will be a chance to grab some pips on the downside. And if we see some unexpected risk off, then you know that these pairs will be very, very volatile. So levels are definitely very interesting up here, but for now, stocks are still bullish, and as long as we are in an easing cycle, of course, they can either remain bullish or just sideways till elections. Now, let's take a look on crude oil. So crude oil, as you know, last time we discussed because of this chart that it's important for inflation, right? So it really depends how crude oil will move going forward. If we'll stay sideways, then it may not have a big impact on inflation figures in upcoming months, but if there would be a very strong rise or drop, then of course this will have an impact on inflation expectations. Now, looking at the wave counts here, I didn't post this wave count yet on our website because I was working on the charts earlier, but if I just give you the quick review here, well, I still think that we are here in a triangle, okay, and that at some point we will see a retest of $60. Possibly this will still occur this year, especially if this upper trend line is not going to be broken. And what's interesting is that so far from the most recent lows, move is in free wave, so it can be corrective, and we could be looking for a potential turn to the downside. And also what I'm looking at here is another interpretation, which is slightly different. It shows that we could be in the middle of this ongoing ending diagonal, and even this one shows that we could see more weakness going into the end of this year, but still there will be a very strong support then around $60. So I'm looking and expecting more weakness on crude oil, but I'm not really sure if there would be an aggressive drop or maybe just a slow drop, and not convinced if this will occur anytime soon, because even if that's a triangle, we are still missing a few more swings here. As you know, triangles are structured by 5 waves, A, B, C, D, and E, and if my counts are correct, then obviously we are still in the middle of this corrective phase. But I think that whenever crude oil really start making very nice breakouts, I think that we will have more clue what's going on, what will happen with inflation and with the US yields, of course, at the same time. And also not to forget to mention Canadian dollar and Mexican peso as well. Now, looking at gold, well, this one was really like a textbook. As you know, we've been actually over this here. We have been sharing this free analysis and free videos quite a lot. Where it is? Okay, so that one was posted what, on 1st of October, and back then, as you know, Hang Seng Index was doing great, Chinese yuan was doing great, so we thought that gold is still in uptrend. And what has been interesting and the most important is that even when the US dollar has rallied, gold was able to find the support. It was just sideways, okay? And we shared this article and we said where the levels are important to watch. It was around 2,600, and the reason why we've been looking for this area is, of course, the technical picture, and from an Elliott wave perspective, as you know, we had this very nice 5 subways within wave 3, so we were expecting a pullback into this wave 4, and 2,600 area became very nice, very close to this zone before we rallied. So now if the dollar as I said earlier, maybe euro dollar is coming into potential supports with first impulse, dollar index at the same time, maybe some resistance. Then if dollar would really made a pullback before it makes another push higher, then this retracement on the dollar can actually, or pause within this bullish sequence on the dollar index that we may experience in the next few days, then maybe this will put more fuel on gold to push it back to all-time highs. So from an Elliott wave perspective, definitely we cannot ignore the clarity of this price action. I mean, you have 3 waves from the highs back into that support area. You have also the channel support as well. And also notice that there was some spike here, okay, back in mid of September. It was just not some normal spike. It was a spike when Fed actually decided to cut the 50 rates for 50 basis points. So actually that was very important, because after that announcement, despite spike to the upside, market came lower, and then I'm sure that at the end of the day, when traders look at the quotes, look at the closing prices, they will decide where to place their stop losses. Okay, so I'm quite certain that there were a lot of stop losses and orders above that spike here. So what happened, as soon as we rallied through it, a lot of stop orders were cleared and market even accelerated. So that's why I think that that was a very important and interesting area when we saw this retracement. And now if we look at the updated price, well, we see that price is already at the upper, slightly higher recently out of this corrective channel. So I'm thinking about more upside. Now also someone asked, I think it was on Friday, what is the substructure of a wave 5? Well, if we look here closely at the substructure of the whole impulse, you can see that in normal uptrends you will have 5 waves in each directional wave. Okay, so you will have 5 waves here in the first leg, 5 waves in the middle, which usually will be the most stronger movement, and then 5 wave movement at the end. And if you look closely here, where it is here, you can clearly see that we cannot recognize any 5 waves just yet here within this wave 5. And always when you think that wave 5 has begun, well, the minimum expectations are that prices will reach a new high here. So if we think that wave 4 is finished, then obviously this level should hold this 2605, and we clearly expect that this market will reach new highs. Now I'm long on gold and also shared the idea with members as well. And as soon as we start approaching this all-time highs here, you really should be very, very aggressive on potential exits, or at least trailing stops. Okay, because keep in mind that whenever we are going to see new highs, fifth wave can be moving into some resistance, and clearly once you see new highs, there can be some retracements as well, even if just short term. Now let's take a look also on what I have here on my list, German DAX and the S&P 500. Now German DAX has made a very nice rebound last week, and we were looking for these supports around 18,900. We identified this also as a small gap. I'm not sure if you will see it here. Now if you're following our analysis, as you know, on stocks, I pay very close attention to gaps because I think that they are very, very useful, especially on some single stocks. And you can see that this gap was here. Let me check. Okay, so we came perfectly into this gap and bounced and away from it. So we were looking for this to be the supports for a wave 4, and you can see that so far we have a very nice progression to the upside. But let's not forget the bigger picture. Okay, keep in mind that we have some overlaps here, okay, between this pullback and this wave 2. And normally when this overlap occurs, it means that maybe market is not that strong anymore. Okay, you can also just try to draw the simple lines here. You can see how sharp this move was, and now you can clearly see the angle of this arrow. So it means that market is not that aggressive and strong like it was in this bounce here. So it means that we should be very careful as soon as we reach new highs, or maybe we can still rally close to 9,700 up there. if that's an ending diagonal, you will have to be very careful. It doesn't mean that my wave count is correct, but of course I would not be looking for any kind of a bullish setups here. I would just be aware of potential reversals, and if we suddenly see from new highs very strong drop, you know what to expect next, because ending diagonals usually, once they are completed, causes a very sharp reversal in price. Okay, so for now we still have room for more upside, because each leg in ending diagonal should be structured by 3 waves, and so far the 5th wave is still has only first leg of this ongoing recovery. Now let's take a look on the S&P 500. So the S&P 500 is trading at new highs. It's pushing up very nicely, even if we see some unexpected drop. I'm sure that during elections there will be new buyers that will try to support the market. Even rhetoric from, as you know, from presidents will definitely, candidates will definitely be some optimistics, and everyone will expect that even after a drop we'll see a new push higher. Now what's the most important maybe is here the intraday substructure. Okay, what we have here is potential wave 1, you have a wave 2, and now you have 5 sub waves up within this 3rd leg from 5,400. So after every 5 waves, what you would expect? Well, market to slow down at least into 3 waves. So watch out for this wave 4. Okay, again, we don't know from where it will occur, but if you want to ride this market, if you want to buy the dips, you just have to be patient and wait on it. Okay, but keep in mind that very strong support then should be around 5,700. If we start breaking below that support, then watch out for potential wedge formation. Then of course our reversal could signal something else, especially if that would be an impulse. I marked the key support or bearish level if broken here at 5,600. Okay, and of course if we start falling back below this previous not only 1 but 2 swing highs, then you know that the top has been formed. But for now, obviously that's not the case. We are in uptrend, we are in easing cycle, and this could obviously extend much higher. My targets for this year were 6,000, and I still think that that's possible to achieve them. But then these cycles could really make a very big changes in 2025. By the way, if you're not our member, if you're not following, subscribe to our channel here on YouTube. Each year, at the end of each year, I release Elliott wave predictions for the following year. So I think that this is definitely something you don't want to miss, especially if you love the Elliott wave analysis. So what's next? We have now some single stocks. Okay, firstly I have here Google. Now this one, did my labels disappear somewhere? Okay, whatever. Okay, here they are. So here on Google now we have some very nice rebound, and notice what happened here is, you know, as I said earlier, what's the most important when you look at the single stocks? Earnings and gaps. Okay, that's the most important, especially from if you're looking at want to define some levels. Keep an eye on earning dates, and then keep an eye on potential gaps. Now usually after earnings, that was the gap here in April, these gaps can be filled. And notice that market made a very nice deep retracement here. It filled the gap, slightly moved to the downside, and now it's recovering. And from an Elliott wave perspective, if I zoom this in a little bit, I can count here as a 5 waves up, right? So that's wave 1, wave 2, wave 3, wave 4, and wave 5. So whenever you have 5 wave movement, you know where to identify the invalidation level. Okay, if you want to, maybe if this one is important for your short-term trades, especially because of risk reward calculation. So that's now our invalidation level. Now, where are my targets? Well, as I said, I always pay attention to earnings and open gaps, and you can see here that one gap, okay, occurred in July after earnings. Okay, so that's an unfilled gap zone right there. So not only the Elliott wave principle, but also these gaps also suggests and makes me even more confident why possibly we could see more gains. Even if you try to label this price action as a head and shoulders bottom formation, you can do that as well. Okay, so that could be your left shoulder, head, and potentially also the right shoulder. So after a pullback, I think that we have more upside here to come. So I think that Google, even if that would be just a wave B rally, still has a very nice upside potential here as long as we are holding above 147. Let's take a look on AMD as well. We covered this one plenty of times. We said down here that we are looking for a rise back to this unfilled gap from July as well. We came pretty close. Now, what's most important afterwards is that we have this broken trend line. So as long as we are above that trend line, I still think that there is a chance actually that we will retest higher prices, especially if we consider the drop after all from that March highs can be in 3 waves. That's why we certainly should not maybe turn bearish just yet here. I would be looking for more upside, but of course the easiest forecast is behind. Okay, that was when we identified this low here because of the fast impulse and then very sharp wave B or wave 2 pullback. So now the easy forecast is behind, and the potential trade idea as well. So you will have to be very careful here. But if I would be long here, then I would just keep my targets open and pull my stops aggressively higher. Now let's take a look also on Apple. Now this one did not change much since last week. I think we covered it last week, and we said that we have some kind of a sideways price action here. Notice that we came back to this small gap from mid of September, and we would then ride away from it. So still, even if it's a triangle, not really the perfect one for to call it end of a triangle. But I think that there is a chance actually that as long as we are holding these lows from September 16, that we could see a push higher into wave C. Let's take a look also on Nvidia. Even someone asked in our chat room as well for Nvidia. Here it is. As you know, we've been looking for this triangle. We were covering it very closely and frequently, not only in webinar but also on Twitter, and we said that possibly we are in a triangle, and that the breakout of that I mean above wave D swing high and wave B would be just another confirmation that new highs are coming. And so far we can see some very nice push. 140 is, I think it's coming this week, if not even higher. So what would be the upside projections? Well, what I usually do is I just take the distance of the triangle, the widest lag. Okay, that's from wave A from the starting point, and then I compare it from wave E. Okay, from end of a wave E, and then you have also from a wave D breakout point. Okay, so that zone up there would be the ideal projection for the upcoming 5th wave. Of course, but whenever we reach a new highs, keep in mind that invalidation levels could be pulled aggressively higher to identify potential top much earlier if some key support levels are broken. Now let's take a look on Tesla. So as you know, last week Elon Musk announced and talked about new robotaxi, and market speculators, seems they were disappointed. We saw a reversal to the downside, but keep in mind that whenever something like this happens, well, that this kind of a news release or whatever will not have significant impact just yet on stock as a whole, okay, as a company. Tesla will still be on the roads, okay. People will still be buying it. So if we see their products, I mean, so if we see some kind of a strong retracement, strong dip after such events, I just still think that if you can identify very valid and very good support levels, it doesn't mean that actually the stock will crash. I just think it can be maybe even much better entries for your investments. And from an Elliott wave perspective, I certainly think that this can be a triangle, and we've been looking for triangle potential limited upside up here around 250, and we said that there is potential deeper wave is still coming, and after this very nice reversal to the downside, I just still think that there is actually a chance that we will see a retest of the lower side. So if I would be looking to buy Tesla, I certainly would be looking for levels somewhere around this lower trend line support, okay. And then for, let's say, for in the months ahead, I would be expecting that sooner or later market will reverse to the upside. There are also a lot of traders that are now just trapped in this range, and longer is the range, more traders will be liquidated. Much easier and maybe much stronger will be the breakout later whenever this one occurs. Now, by the way, we will start offering also services on stocks in the future. We are just still working on some stuff, but if you are interested, definitely keep an eye on our social media and website as well, because that's when we will give you all the details. Now, looking at cryptos, as you know, Bitcoin found some stabilization, found some buyers in the last 2-3 days. So I was scanning through some of the charts here, and I actually came out with the idea that there are 3 very valid potential wave counts on crypto total market cap that we will also post it on our website as well. So first and primary is still a potential ABCDE triangle, okay. And the reason is because move from August to September highs was in 3 waves, okay. So as long as this 2.3 trillion is not breached, that's the latest swing high around there, that's how long we can stay sideways. So if my assumption is correct, then of course lower wave C is still possible. But if we start breaking this trend line, red trend line, at the same time we see a close, maybe even better to say, because there are cryptos, you see a weekly close above 2.3 trillions, then I think that much more interesting bullish developments can unfold. Now, one idea is that then maybe this could be a leading diagonal, okay, from the lows. So why this is important? Because you would then have 5 waves up if the market reaches breaks 2.3 trillions. So you would be able to count 5 waves up, but in a wedge shape. So still, after the next pullback, if these levels are tested, if you see new highs, I still think that after these pullbacks there can be a massive recovery coming, okay. But keep in mind that the drop from the highs, no matter how I look at it, is in 3 waves. It's corrective, okay. And then we have another interpretation here, which is also valid. It's potential 1-2 bullish setup. Now that's a very bullish setup, and of course for this one to be confirmed, what you want to see is that market start breaking the upper line of this potential base channel, okay. And that comes in around 2.45 trillions, which is also the swing high here from July. So I think that's a very important level. If we can pass this one, then certainly we could be very soon, very fast back at new highs here. So once again, 2.3 trillion is the most important one. We either going to see a sharp breakthrough for an extended wave 3, or afterwards we will see a pullback. But in both cases, I just think that this will give us a lot of information that will suggest that cryptos are headed higher. And as you know, sooner or later, of course, we will expect more upside. We are still observing these consolidations and potential breakout of consolidations that can occur in November, maybe already later this month, maybe in December, because as you know, this has been mostly the case since 2018. So maybe we are approaching this very nice breakout level. Actually, if you look at this scale here and the price chart, we are not that far away from new all-time highs at all. So I just think it's a matter of time when we finally see a push and break to the upside. Now Ethereum, this one, it's a little bit more tricky, not really offering any kind of a good price action on a smaller time frame, but if you look here on a bigger time frame, looks like that we have this potential triangle in play, and 2000, I think it's a very important, very big level. So even if you try, let's say that I want to delete this, okay, and you can clearly identify the potential big supports. It's around 2000. Okay, we even retested these levels here a few times from both sides in 2021, then came very close in 2022, broke through it, then tested it as a resistance in 2022, 2023, and now at the end of actually exactly a year back, we went above it with very nice extension, and now we looks like we could be looking for a retest of that level. So if we see some new dip towards 2000, I still think that that could be quite interesting support for a next rebound. And if that would be the case, we would be even more confident that this triangle is really playing out here. Now some weak coins like Dash also have a very interesting structures. So what we are looking at here is a potential very big ABC decline. More importantly, notice the pattern here at the end. So as I've been discussing about ending diagonals a lot over the last few weeks, well, ending diagonals are very powerful. Okay, it tells you two things. Now the first, that the current direction is losing strength, and the second, it tells you that sooner or later momentum should pick up. Okay, and moves can be explosive, and usually this happens on the opposite side when least expected. And whenever that's the case, you can see that the whole wedge pattern is fully retraced. Okay, so that's basically the ending diagonal. That's the basic structure of the pattern. So in each leg you have 3 subwaves, right? And the most important is that you patiently wait on a potential throw over or a rebound from the lower trend line, and when the upper trend line is broken, that's when the fun part can show up with a very sharp and strong move. So I'm thinking that there is actually very nice upside potential on this one, but of course we have to see this trend line broken to make sure that bottom is really forming. Okay, by the way, this is from our educational videos, so if you are interested in more of this Elliott wave theory, then make sure to check our website wavetraders.com and watch for the videos. Okay, let me check chats real quick here. Tim said no audio, no video, but everything I guess was fine. Someone asked for gold. Okay, we covered gold. We even looked at Bitcoin as well. Let me check here. I'm interested in gold and silver. Okay, we covered gold, so I will take a look at silver real quick. What, 45 minutes? Okay, we were quite long today. Someone asked for Solana. We actually covered Solana, I think 2 weeks back in our webinar, so make sure to check our live sessions. We covered it there, and I just think it's still relevant analysis. Okay, so regarding silver, well, as you know, everyone is so bullish silver. By the way, we were also very bullish, but now when we are seeing these some key levels being retested, I just think that we will have to be very careful when going into 2025. And the reason is very simple. You have 3 waves from these COVID lows. And more importantly, you have this triangle in the middle. So we know that moves out of a triangle can be final in a sequence. That's why I'm thinking that 34, 35 can be very important, very strong resistance. If we see strong push into that area, there would be even more traders, investors in particular, that will be sucked into the market. So I just think that we will have to be very careful, especially if US yields will continue to move higher. If we'll see dollar keeps moving higher as well, then we know that at some point this can be can cause limited upside on silver. But obviously that's just a poor speculation. For now, I'm still looking for more upside. I think that this recovery is incomplete, but in 2025, if I will see maybe stocks forming some important pattern that would suggest that we are topping out, if we'll see same thing with US yields showing us bullish picture, and also on dollar showing a bottom formation, then we know that what this could mean for silver. Basically, we were looking for this same method, same principles when the market has been trading in this consolidation here for most of 2023. Okay, traders, thank you for your attention. So once again, today is the final day. You can get 2 months for the price of 1 if you are our new user. So make sure to check this offer out. Once again, don't forget to subscribe to our channel, press a like, and I will again catch you next Monday. Thank you. Bye.